Hello, guys. Welcome to today's market recap. Whereby I'll be talking about the trade which I'll be possibly taking today, right now. Um, as you can see, the sentiment is US dollar weakness. The sentiment, I repeat, the sentiment is US dollar weakness. This is called an eToro, whereby its algorithm measures the 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 calculates either the USD strength or weakness in the market. So, in order for you to trade this strategy, or how I trade, is possibly in two ways. So, I'll be looking at either a possible place. I mean, let me try to share you the other place. So, okay. So this is eToro. It measures the USD weakness and strength. Right now, right now, US dollar is so weak, is negative 0.3. So what I'll be expecting, I repeat, what I'll be expecting, this is a trade which I'll be taking this moment, this today, this time. So let me explain firstly how I'll be taking it and why I'll be taking it. As you know, I trade based on USD sentiment. So when I mean sentiment, it means like so it means a number of amount of traders in in a dollar pair. So when the buyers are a lot of that when there are a lot of buyers, the market tends to go long. But before it goes long, I repeat, before it goes long, it must deceive people. So the market isn't really very open, as you know. Like you keep your support and resistance, and you expect the market to go in your favor. So um so so there are a lot of traders who really don't understand the market sentiment, and here is how I personally trade. Ah, damn. So this is how the trade is currently at. Let me let me close everything, and I'm gonna explain how I will trade it and why I will trade it, and the take profit and the stop loss. So as you can see here, this is a clean chart, and I'm using the 15 minutes time frame to trade the USD sentiment. So what I'm gonna do is, or what I'm gonna try to explain is how the market moves. So in order for euro to buy, you need sellers in USD to be lesser than the euro. What I mean is when you execute your trade, it basically interprets on your MT4 or MT5 is like you are buying euro at a price, at a lower price, and selling USD at the same time. So you're buying euro and selling USD. Uh, Hence, when it goes up, you make profit. When it goes opposite direction, you get loss. So 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 let's say right now it's New York time, and this bullish move here was on New York Open, and this down move was in London. And what I'll be pretty much expecting, because I've already confirmed USD is weak at the New York time, possibly I could be expecting certain amount of pullback. Then I'm gonna keep a 20 pip take profit. I'm gonna take and a stop of 10 pips. So it's a 1:2 risk reward ratio. It's very worth it because of the market has produced an opportunity. So if you don't want to trade, if you can't take the trade here, but there's a bigger possibility of the market to do a pullback here, down here. So that's actually basically it, I think, because in order for an uptrend to continue, you really need higher highs and higher lows, or lower highs or lower lows. So this market sentiment is confirmed. This market sentiment is confirmed. And when the market sentiment is confirmed, it means there's an opportunity. So if you're gonna trade, I highly suggest trading USD pairs because of the momentum. Price could be going in your direction very easily, but it's very risky too. So I could, if I don't get an opportunity on Euro USD, I might get an opportunity on Euro JPY. So what I mean is Euro is positive, USD JPY is negative. So let us do some math. Let us do some math. So when Euro, let's say Euro is positive 0.30. I know everyone hates math, and it's how I do it. And USD JPY is 0.04 negative. So it's negative and brackets, sorry, negative 0.04 brackets. You possibly get zero. You possibly get, oh sorry, 0.34 positive. Yeah, that's it. So there's a bigger possibility. There's a bigger possibility the market could go 34% positive in a bullish direction. So let's say, let me clear all drawings and show you an example. So if I drop here, Euro JPY is at 0.26. It means Euro could be possibly seeing a 60% move, 0.6% move. So what do I mean by 0.6% move? So it's gonna deceive people like it's gonna continue, but I know it's gonna do some pullbacks. So let's say Euro JPY. So this is how the market is right now. So there's a bigger possibility the market could continue due to this engulfing candle on technicals, or the market could slow down. The market could slow down, and I think this entry here is pretty much riskier because of the market condition. So what I'll be expecting is um, a 30 pip move. So a 30 pip move will be around there. So pretty much this is a risky move. It might hit your stop loss eventually. It might hit your stop loss eventually, but I really don't rely on this Euro JPY pair, but I really do rely on Euro USD. Euro USD might be the best opportunity for us to trade. So could we see some pullbacks? Okay, let's analyze. Let's analyze. So Euro has broken the high of the day. GBP is currently trying to break the high of the day. Audi USD is has already broken the high of the day. None of these major pairs have broken it. Gold has done it. Nasdaq, US 500 or SPN or SP 500, whatever you call it. US 30 is lagging. Yeah, US 30 might break, but possibly at the end of the session. Possibly at the end of the session. But as I was saying is, you need to let this move occur. Let the USD move occur first, then relax and wait for the pullback. If you are like aggressive trader, you could enter small position, then when it drops, you enter a bigger size of position, then it drops again. So it's very complicated. Very complicated. But personally, I will wait for a pullback. So I will share the results if I get a chance to trade today. I really will share the results. Hopefully you understand. Hopefully you understand, and hopefully I didn't make it complicated enough. So yeah, I'll see you all soon.
Hello guys, it's always
Holy Forex speaking, and now it's midnight. The market has already closed, and I'm gonna review. Like I'm gonna continue to validate my statement by saying that when I recorded the first time, I expected a pullback. So this was a pullback here. This was a pullback here. So if when I traded a 10 pip stop, a 20 pip take profit. So unfortunately, the trade didn't play out. Unfortunately, the trade didn't play out. So I was forced to hold over weekends, but it came so close. It came 18 pips to play out. Is it 18? Yeah, 18 pips to play out. But no worries, no worries. So this is also a sentiment whereby, let me bring you to the eToro and explain why I'll be holding it till London time. So as you can see here, 34, 44, 1%. These all moves are basically or were caused by the dollar weakness. So, but when we saw the dollar was around 22, and now it's 22 or 21. Now it's in 41. So it means it moved 20 more pips, and US dollar didn't move 20 more pips. So when the market opened, the market could possibly open to the upside and trigger our take profit because of the market condition continued. Like for example, when you trade and it reaches New York time or mid London, you see like the market is changing direction in the very forceful way. Like you are in a buy, then let's say from Asia, then you're in deep profit, then the market reversed and hit your stop loss around mid London or New York open. That place is where the market either changes or does a pullback to continue. If the market, if USD sentiment is really weak, it might continue to the other day. Or if the market isn't really weak, but it was weak, but not that really weak, it might be on Monday, it might be choppier. So anything can happen. So you need to expect anything. That's it for me personally. That's it for me personally. And I explained Euro JPY. What the fuck is this? I explained Euro JPY, the reasons why I could go long. Hopefully I do attach it. And the same scenario happened. The same scenario happened. So as you can see here, I said if you're able to trade it, like you're aggressive, people could be buying here, but I expected a pullback. So this was a pullback. Then I could possibly enter around here, then hold to the upside. I might close it around 1 hour and 30 minutes London Open, because when it reaches 2 hours, like I really don't know what time will be at your country, but at our time, Eastern African Standard Time, it will be around one, I think, around 1 or 12 noon. The market usually reverses, so I usually try to stay out of it when the market reverses. So anything can happen. But anyway, I might say this. This is my personal thoughts, like my personal view or point of view, people may say. I want to tell you something, that if this is out of topic, but if you're a trader and you do review a lot of strategies, you got books, you got you got courses, you're not gonna be successful. That's the reality. Well, I'm gonna show you, like, it's this video is totally free. What I'm gonna tell you is the only thing that traders become successful is the discipline to know when and why to trade. That's all for today. So hopefully this video doesn't get so long, and hopefully you don't get bored. Anyway, hope you enjoy it. Peace.